Dear Mr. Munger, please share your thoughts on the recent Wall Street Bets GameStop short squeeze. It seems to involve a lot of your standard causes of human misjudgment.
Well, it certainly does, and that's the kind of thing that can happen when you get a whole lot of people who are using liquid stock markets to gamble the way they would in betting on racehorses. And that's what we have going in the stock market. And the frenzy is fed by people who are getting commissions and other revenues out of this new bunch of gamblers. And of course, when things get extreme, you have things like that short squeeze. It's not generally noticed by the public, but clearinghouses clear all these trades. And when things get as crazy as they were in the event you're talking about, there are threats of clearinghouse failure. So it gets very dangerous. And it's really stupid to have a culture which encourages as much gambling in stocks by people who have the mindset of racetrack bettors. And of course it's going to create trouble, as it did. And I have a very simple idea on this subject. I think you should try and make your money in this world by selling other people things that are good for them. And if you're selling them gambling services where you rake profits off the top, like many of these new brokers who specialize in luring the gamblers in, I think it's a dirty way to make money, and I think that we're crazy to allow it.
This is what I was saying in my other video, is that the founders of Robinhood think that they are making the world a better place, where I agree with Charlie here. They're just turning a bunch of gamblers into addicts. It's like giving people heroin and saying, well, you know, I didn't make them take it. It's the same thing.
Our next shareholder question comes from Simon Jacobs. He writes, many observers see market behavior that reminds them of the dot-com bubble, wild speculation, endless SPACs and IPOs soaring on their first day of trading. Do you agree that there is a close parallel to the late 90s and this is therefore, quote, must end badly?
Yes, I think it must end badly, but I don't know when.
You know, another shareholder, Bill Roberts, asked about SPACs, and he points out it seems like everyone, including actors, athletes, singers, and politicians, are getting into the business of promoting their own SPAC. Why do you think all these SPACs and the promoter, what do you think of all of the SPACs and the promoters pushing them?
Well, I don't participate at all, and I think the world would be better off without them. I think this kind of crazy speculation in enterprises not even found or picked out yet is a sign of an irritating bubble. It's just that the investment banking profession will sell shit as long as shit can be sold.
Well, there you go. You know, when craziness like this happens, just the best way is just to not participate and focus on your own thing.
Do you think value investing is still relevant in a GDP decreasing world? And what about passive investing?
Well, that is easy. Value investing, the way I regard it, will never go out of style, because value investing, the way I conceive it, is always wanting to get more value than you pay for when you buy a stock. And that approach will never go out of style. Some people think that value investing is you chase companies which have a lot of cash and earn a lousy business or something. But I don't define that as value investing. I think all good investing is value investing. It's just that some people look for values in strong companies and some look for values in weak companies. But every value investor tries to get more value than he pays for. What is interesting is that in wealth management, a lot of people think that if they have 100 stocks, they're investing more professionally than they are if they have four or five. I regard this as insanity, absolute insanity. I find it much easier to find four or five investments where I have a pretty reasonable chance of being right that they're way above average. I think it's much easier to find five than it is to find 100. I think the people who argue for all this diversification, by the way, I call it de-worsification, and which I copied from somebody, and I'm way more comfortable owning two or three stocks which I think I know something about and where I think I have an advantage.
I think here Charlie makes a good point talking about value investing, and I find this too. Some people are giving me a hard time that my website is called Classic Value Investors, as if I have to be investing in nets or investing in things that are trading below cash. Value investing is about buying a piece of a business and knowing what you're getting in return. And that value doesn't have to be cash on the balance sheet. It could be a business of what it's worth today, or it could be a business of what it's going to be worth in the future. So there's many different ways that people calculate value, and it's not about just being attached and just looking for value just on the balance sheet. Value investing is, as he said, is in all intelligent investing is value investing. It's just simply knowing what it is that you get for the money that you pay.
Jeffrey Malloy asks, what is the biggest competitive threat to U.S. banks like Bank of America and U.S. Bank, both equity holdings of the Daily Journal Corporation, over the long term? He asks, is it digital wallets like PayPal, Square, or Apple Pay? Is it Bitcoin, decentralized finance, or something else?
Well, I don't think I know exactly what the future of banking is, and I don't think I know how the payment system will evolve. I do think that a properly run bank is a great contributor to civilization, and that the central banks of the world like controlling their own banking system and their own money supplies. So I don't think Bitcoin is going to end up the medium of exchange for the world. It's too volatile to serve well as a medium of exchange. And it's really kind of an artificial substitute for gold. And since I never buy any gold, I never buy any Bitcoin. And I recommend that other people follow my practice. Bitcoin reminds me of what Oscar Wilde said about fox hunting. He said it was the pursuit of the uneatable by the unspeakable.
Charlie, you actually got a couple of questions from shareholders about Bitcoin, and one follow-up here. Mark Blakely from Tulsa, Oklahoma, he asked if your opinion on cryptocurrencies has remained the same, and would the Daily Journal consider Bitcoin or any other cryptocurrency as an asset on the balance sheet, similar to what Tesla recently did?
We will not be following Tesla into Bitcoin.
So I saw a bunch of people on Twitter commenting about Charlie's comments on Bitcoin, and of course the same old, he doesn't get it, he's old, he doesn't understand technology. So no matter what people like this say, it's things like that are never going to change the minds of people that are into Bitcoin. They are drinking the Kool-Aid. They want to believe the fantasy that it's going to take over this payment system and all that, all of those predictions. So no surprise here that he doesn't like something like Bitcoin. As he said, he doesn't buy gold. Why would he buy Bitcoin? He prefers to buy productive businesses. But yeah, that's his comments on Bitcoin.
Charlie, Caroline Smolinski would like to know, which do you think is crazier, Bitcoin at 50,000 or Tesla's fully diluted enterprise value of 1 trillion? What do you make of these two pricings?
Well, I have the same difficulty that Samuel Johnson once had when he got a similar question. And he said, I can't decide the order of precedency between a flea and a louse. And I feel the same way about those choices. I don't know which is worse.
You see, what Charlie's missing here is that Tesla is a technology company, and therefore it should have an unlimited valuation, and Bitcoin is a technology token, so it should go to the moon. That's what he's not getting. He doesn't get the technology.
Richard Saunders would like to know, should there be a tax on buying stock now that Robinhood trades are free?
Well, Robinhood trades are not free. When you pay for order flow, you're probably charging your customers more and pretending to be free. It's a very dishonorable, low-grade way to talk. And nobody should believe that Robinhood's trades are free.
Yeah, so this is the point that I made before in my prior video. People think that Robinhood's trades are free, which they're not. Robinhood is simply selling the order flow to the hedge funds that are able to front run these retailers. Free trading is like free shipping. There is no free shipping. It's a matter as to who pays for that shipping. The same here. There is no free trading.
Okay. We have a question from James Lee from La Cañada, California. He writes, it seems likely that the current Fed policy of keeping interest rates near zero will only exacerbate the income disparity in this country by benefiting those who own the financial assets. What do you think we can do to help those who are currently falling behind as a result of this pandemic?
Well, it's hard to know what exact macroeconomic policy is correct because no one knows for sure just how much government intervention is wise and at what point the government should stop intervening. And I don't think we have any great gift at making macroeconomic predictions about how the money, and I think that to some extent the complaint about the rich getting richer as a result of the COVID panic, I think that's a misplaced concern. Nobody was trying to make the rich richer. We were trying to save the whole economy under terrible conditions. And I think by and large we made the most practical decisions that were available to us. And we made the rich richer not as a deliberate choice, but because it was an accidental byproduct of trying to save the whole civilization. And it was probably wise that we acted exactly as we did. And it wasn't some malevolence of the rich that caused it, it was an accident. And the next time around, why the poor will get richer faster than the rich, that thing's circular. Who gets rich faster by class is going to vary over time, and I don't think anybody should be too concerned by it. As a matter of fact, what happens is that to make a nation rich, you need a free market system. And if you have a free market system that's trying to get rich in the way recommended by Adam Smith, what happens is that it's a very irritating system because the poverty that causes so much misery is also causing the growth that makes everybody get out of poverty. In other words, to some extent, it's a self-correcting system. And that makes the whole thing very awkward. And it's a shame that the economics textbooks don't emphasize how much a growing economy needs poverty in order to get out of poverty. And if you try and reduce the poverty too much, it's counterproductive. And these are very difficult questions, and most people assume that it's simple. I mean, if we could make the world richer by just raising the minimum wage to $100,000 a second or something, well, of course we would do it, but but we can't.
We have a question from Bergen, Norway. This comes from Knut Martin Carlson. He would like to know, is the oil and gas industry the new newspapers?
I don't think so. I think the oil and gas industry will be here for a long, long time. As a matter of fact, it'll be here for a long, long time if we stop using much hydrocarbons in transportation. The hydrocarbons are also needed as chemical feedstocks, and I don't think that hydrocarbons are going. I'm not saying that oil and gas is going to be a wonderful business, but I don't think it's going away, and I don't think it's like the newspaper business.
This was obviously for the tanker gang. Oil's not going anywhere, so tankers should be okay.